Hello, this is Dean Malone with Compass FX. I hope you're doing well today and you're getting some good trades. If you caught my video yesterday and you followed the instructions I shared about trading the non-farm payroll, you probably had a good day today. As a matter of fact, I received some emails today from folks saying thank you for the video. Some folks actually picked up some pips today because of a setup that I had mentioned about the euro dollar and the pound dollar and my expectancy to see them move to the upside. Even though the non-farm payroll number didn't come in line as I thought it might, the pattern itself worked out exactly as I had mentioned. So what I want to do today is to go back over what took place, what did I see in the synergy trading model, and to make you aware that you can go to compassfx.com and download the synergy trading model. Now the synergy model is a combination of looking at simply price action with market sentiment. And the Trader's Dynamic Index is an indicator that I developed a few years back. And what I simply do is I monitor what price action's doing and what sentiment, based on the Trader's Dynamic Index, what it's doing. When you have price action and market sentiment, when they're both moving in the same direction, you have a higher probable trade. Now the interesting thing is when price doesn't do what we see in the Trader's Dynamic Index. And this was a perfect setup yesterday to potentially see the market make a move to the upside. Let me talk about that a little bit more in detail because that's exactly what happened in both the euro dollar and in the pound dollar. As a matter of fact, it also showed up in some other currency pairs. I'll share both of those with you, the Aussie dollar and the dollar Swiss. What we're looking for is that price and market sentiment move together. When they don't move together, we're looking for potential divergence, whether it be regular divergence, which would be a reversal, or hidden divergence, which mean continuance. And what took place yesterday was when the market makes a strong move up, especially when you see in the Trader's Dynamic Index get up here. I mean, this guy got up here somewhere in the ballpark, close to the 90 mark, and couldn't seem to go any higher. And then started falling back down, and it fell all the way back down. And yesterday this got down right in this neighborhood. When I did the video, is right around the 50 level. Now the 50 level in the Trader's Dynamic Index is considered kind of a neutral, like home base. Okay, now it even dipped a little bit further down, but price didn't budge. Price stayed right in a tight little range. When you have the Trader's Dynamic Index moving in the opposite direction of what it was moving, and price isn't budging at all but staying in a tight range, that is hidden divergence. That is a sign of continuance. Now it's an indication that the market's going to continue. We're going to wait for it to take place. And I know that some traders were sitting there today. I had mentioned look for it to break out of this range here. The top of the range was about the 36.88 level, and this had been a fairly tight range of about 40 pips. I had mentioned that if the number comes in line or up around 200,000, look for it to continue moving on up. I had mentioned also that if the number was much lower, under 100,000, we might get some risk aversion. Well, the number came out 142,000, a little bit less than what was expected, but yet the market moved up anyway. It broke the 2013 high of 37.10. And I'd mentioned that there's a possibility that it could get up close to 138 today. We got within about 8 pips of the 138 level that I had talked about. Now, again, what we're looking for is those signs of the Trader's Dynamic Index coming back to the 50 level after a big move, but yet price doesn't do anything. This is telling me that the market sentiment is ready to go either way. It's sitting at home plate or home base. It's in a neutral position. It doesn't matter which way it goes. It's just waiting for the push of the market. Let's take a look at the pound. This was another one that I mentioned. Now the pound did pull back a bit more here in price, but look what happened here. It went beyond the 50 level and came all the way down below the 32 level, way from one side to the other, but yet price pretty well stayed in about a 65 pip range and then proceeded to get tighter. then came the pop. And I mentioned look for the break above 61.95 and a potential push up to 62.60. Nah, didn't quite get to that. We got to 62.47. I missed it by 13 pips. But you knew hours ahead of time of the probability, the high probability that we would see the euro dollar and the pound dollar continue to push higher. Now, if you simply take a look at the Aussie dollar, very similar look. So I didn't talk about this one, but very similar look, and look what it did. It pushed up. So market pushed up, went kind of flat. Traders Dynamic Index came all the way back down to about the 50 level, even lower, and then boom, we got the pop out. And flip side of that, look at the Swiss here. The Swiss, similar situation, just in the opposite. We had a big drop down, big push down the Traders Dynamic Index. Look what happens to the Traders Dynamic Index. The market sentiment comes all the way back up. No big rise in the dollar Swiss. As a matter of fact, we stayed in a pretty tight range of no more than about 40 pips again, 35, 40 pips. But yet the Traders Dynamic Index made a big push back to the other side, settled right around that 50% level, and then came the drop. So the next time you see that in the synergy trading model, be ready for continuance. Be ready for the market to make its move, and oftentimes it happens right around a significant economic event or news item like the non-farm payroll. Well, this is D. Malone with Compass FX. Again, I want to thank everyone for your emails. I'm glad you made some pips today, and for those of you who missed out on this setup, take time, study it, and look for it the next time it appears. Look for continuance in the marketplace. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.